Hey there, and welcome to another segment of Coffee Talk. Join us today is the Cyber Liability Program Manager at McGowanPro, rferrini. For those who don't know, McGowanPro specializes in providing professional liability insurance, errors and omissions to accounting professionals. Welcome, Rob.
Thanks, Chris. I appreciate being here today.
So what's going on in the cyber insurance market these days, and what's happening and why, Rob?
So that's a great question. A lot has been happening in the last couple of years. A lot of it was based on the pandemic. And what happened was insurance companies weren't prepared for people working from home. There was a lot of vulnerabilities with people working at home. There was a lot of claims that came around in 2020 and 2021. And because of all the claims based on ransomware, based on denial of service tax, a lot of different reasons why the insurance companies had so many claims, is they clamped down on a couple of different things. One is they reduced the ability to get capacity, which is large coverage. So if you wanted a $10 million policy, you might be only get a $5 million at renewal. The other thing that they did was they added a lot of additional questions. When in 2019, we had an application that was probably 10 questions, 10 simple questions. They then came up with one that's about 35 or 40 questions, a lot more detail in those questions, and clients weren't ready for it. They also drew a line in the sand that said, if you don't have these certain things, we're not going to offer coverage. And then on top of that, they increased coverage substantially because they had so many losses. One company out there, for every dollar they took in, they lost about 3 in 2020. So they had some really tough losses, and they had to stem the tide. So it's getting better. It's not back to where it was, but the premium increases are decreasing. The requirements are still increasing, the requirements to be able to get coverage. But it's a pretty volatile market right now.
And we're hearing and seeing that cyber attacks are on the rise year after year. So I have to imagine that insurance companies are trying to protect themselves. They're asking more questions. And in fact, speaking of those questions, transparency is key there, isn't it, Rob?
It is.
And being honest on those questions can come back and backfire. Can you expand a little bit more on that?
Sure. So some of the things that the insurance carriers want is they're drawing lines in the sand for multi-factor authentication. They want multi-factor authentication on just about everything: remote access, privileged accounts, and programs that have personally identifiable information. So if you don't have those things, they are going to come back to you and said, on the application, you filled this out and said that you do have this. And if you don't, they're not going to provide coverage. The other area is encrypted backups. And then the third thing is to have EMDR or XDR, which is coming up in the future. So those are the three real things that they want. They'd also like you to have a VPN. So they're getting more and more requirements that if you don't have it, you have a breach, and that you said you had it on the application, they're going to come back and deny coverage.
And I can't imagine that'd be a good situation for anyone that puts everybody in a bind. So it's incredibly important that firms are being honest and transparent, and or addressing the issues, which is probably in their best interest anyway, to protect themselves.
Exactly.
Besides, what kind of claims are you seeing these days? What is the impact on a company that gets hit by cyber attack?
So we see a lot of claims around ransomware, either to help pay the claim, pay the ransom, negotiate the ransom, determine if they have backups that they can restore with. So I would say that the biggest issue is ransomware. Second probably is fake emails and social engineering and business compromised emails. Those are probably the second area where we've seen most claims. And we see claims regularly. And a lot of times most of the time it affects your coverages and whether or not you can get coverage the next time. If you have more than a $25,000 claim, which is a pretty low claim, some carriers won't insure you at all.
And speaking of cyber insurance, and just to dig a little deeper and unpack that a little bit, because it's a loaded coverage. I mean, there's a lot of pieces behind cyber insurance, from negotiating insurance, forensics insurance, paying the ransom. Is the ransom going to be paid up front, or are you going to be reimbursed? I mean, those are all those pieces of cyber insurance that, you as a business owner are probably trying to figure out. Unless you've been through one, you don't necessarily know the questions to ask. And I think,
Exactly.
working with people like Rob and really digging deep into all the layers of a cyber attack and what could happen, which runs right into, what are some of the new requirements that you're seeing? I know we covered a little bit, but when you get into cyber insurance and how deep and involved that is, from the ransomware to the proof of life, all these scenarios that come up, and who's going to pay for these up front. Meanwhile, your business is down, you can't do your job. I mean, what are some of the new requirements also addition to that? What would you recommend a customer absolutely get with a cyber insurance policy?
So that's a great question, because there's a lot of misconception out there about where cyber insurance is best covered. So most insurance policies, so if you're looking at your business owner's policy or your office policy or even your professional liability policy, they're going to have some cyber coverage in there. The cyber coverage that's going to be in there is inadequate for today's threats. Like you said, there's a lot of things that need to be done, and your professional liability or your business owner's policy is really designed for damages that you cause. So if you cause damage to a client, there's going to be coverage for that. If you have to respond to a breach, whether it's hiring somebody to help you with the forensics, whether it's having somebody to help you negotiate with the person who's trying to get ransom from you, holding your data ransom, whether it's notifying people that you had a breach or notifying regulatory bodies, all of those things have to be done. They have to be done quickly. They have to be done concisely. So a good cyber policy is going to have both of those areas covered under a policy. Some of the things that you should have done is you should work with a good cybersecurity team. You should keep up with your patches. You should have regular email and clean out your email regularly. A good retention policy is great. We had a client the other day that just their data mining to find out what was in their emails was over $200,000, because they had about 15 years of emails that the forensic people had to go through to find out, do you have any social security numbers in there? Was it attacked? Did you lose that data? So just in the data mining alone, they had an over a $200,000 claim. So there's a lot of things that you can do to mitigate your loss, very proactive. And then you need to find a coverage that is all encompassing, because there's a lot of moving parts, as you said.
So we're hearing also on the street that getting coverage is becoming more difficult. Less insurance carriers are wanting to participate in cyber coverage. Can you expand a little bit more about that? And also, why are firms having a hard time getting coverage these days?
Before we had the problems that we had in 2020, you could easily get coverage. There was lots of, everybody, it seemed, every insurance company was offering some sort of cyber coverage. They're trying to grab market share. They're trying to build a book, and then the claims came. I would say that half of the market left, half of the market, the half that didn't leave, they made it much more difficult to get coverage. You have to provide a lot more detail than you ever had to before. You have to have certain benchmarks that require you to have things so that the insurance company will cover you. And it's a capacity issue, because a lot of what happened was this is kind of inside baseball, but insurance is reinsured. So an insurance company will get more insurance from another insurance company that will kind of insure their policies. And the reinsurers said, well, wait a second, we're having way too many losses for the contracts that we signed. We're going to hit the pause button. So when you used to be able to get $5 million of coverage, you might only be able to get $2 million of coverage. Where you used to have $2 million of coverage, you might only be able to get $1 million of coverage. And that's mostly due to the reinsurance of their insurance. So they might have a certain level of capacity that they can have for their entire book of business. But because it got difficult, everybody tamped down so that they have a smaller amount of coverage that they can pay out. The companies are very stable and they're financially secure and they're A-rated and all of that stuff. But still, so that things didn't get worse, they tamped down on coverage, they tamped down on limits of liability, and they added a lot more requirements. In addition to that, the companies either left or merged, so it made less markets. We probably had 25 or 30 that we worked with in 19. We're probably down to 8 or 10 now that will give us capacity and are just not outrageously secure that they don't want to take clients and make it just difficult for them to jump through the hoops. Some companies just don't want to get out of the business, but they also don't want to insure anybody.
Which means, because the market's consolidating, even customers possibly even have to go to several different carriers just to make sure that they have coverage. And you may have to go to a specific or another insurance carrier that will do just the cybersecurity. What about fake emails, fraudulent and instruction emails, and where is that covered?
So that's a good question, because the cyber policy will cover a fake email for the loss of internal funds. So if the insured's funds are taken, they have a direct loss, it would be covered. But if it's a client fund, most cyber policies don't cover that. So when you get a fake email or social engineering issue from outside of the office, outside of your organization, it might be because accountants are doing bill pay, or they have discretionary authority on funds transfer, or they're setting up billing and paying billing for clients. So all those issues might come into play, and most cyber policies won't cover client funds, but it will cover insured funds. So one of the biggest traits, and I don't know why people do it, but one of the biggest hacks is you get an email to a new starting employee, and this happened to us not that long ago. An employee had been there for about 3 weeks and got an email from the managing partner that said, "Hey, I know you're going out for coffee, so would you get me 100 gift cards and send me the codes on the back, because I'm going to give them out to the employees as gifts for a competition we're going to have." And so that person, being new, went out and got their coffee like they do every other day. Not that the boss knew it, but went out and got the cards, emailed them off, and then went to the boss and said, "Hey, I'm new and I've only got my first paycheck. How do I get the money back for those cards you asked me to get?" And that's when they found out that they sent them to the wrong place. So that was covered, because that was an internal email, and that was the loss of client funds. Loss of insured funds, sorry.
Where do you see this going, Rob? It's already been, if you would have told me a couple of years ago that we are where we are with the pandemic and all these cyber attacks are on the rise every year, I keep thinking to myself, when does it end? Where do you see, where are we heading over the next 24 months in the insurance business? What do we need to do to plan ahead?
Yeah, so great question. So I went to a couple of symposiums over the last few months, and they bring together all the insurance carriers to talk about what they see happening, where they've been, where they're going. And one of the things that is good news is the premium increases shouldn't be as substantial as they were. So it's kind of a double-edged sword there. They're going to go up, but they're not going to go up as drastically as they did before. Number two, they talked about how they don't know what the next problem is going to be. So they're trying to reduce the time that they put out their quotes to the market. What I mean by that is before you used to get a renewal quote, it used to come out about 90 days in advance. So they were going to give you 15 months of coverage. Now there's talk of, coming out 2 weeks before the policy renewal, or even offering 6-month policies. So that's something that probably won't fly, but it might. The other thing is the new safeguards from FTC. Well, I guess they're not new, but the safeguards go into effect in June. And I think the insurance companies, because they talked about it, the insurance companies are going to be, using that to make sure that you're up to speed, especially from financial services companies. So that's another change that they're going to make, and they're always tightening their requirements on their applications. So those kind of things are going to be the same. So higher rates, but not as high. More questions on the application. More secure, more resources for them to figure out what's going on. And then lastly, the capacity is starting to expand. So if you had a $2 million policy 3 years ago, you probably can get one again. If you needed a $5 million, you probably can get one again because capacity is coming back. So those are what I see over the next 2 years, 18 months to 2 years. But I think the best thing is start your renewal process early. Work with a broker that is a specialist in cyber. There's a lot of us out there. And then work with your IT people, both on the security side and the managed service providers, to make sure that you have the right things in place, and start early because it's difficult to get it done in 90 days. We've had a number of carriers that said, too bad, you don't have that stuff, we're not going to offer you coverage. And so
be honest on the paperwork.
Yeah.
So important. And some of those questions are very difficult. You don't, in insurance world and the language that they use, and that's why it makes sense to work with an expert that can guide you through, like Rob, and walk you through and explain these things out. Have an attorney, a cyber attorney that specializes in review this paperwork, so you understand what your exposure is, and weigh the risk versus the coverage at the end of the day.
Mm-hmm.
Well, thank you, Rob. Thank you for your insight. And if you want to learn more about Rob and his team and what they're doing to help them, please contact McGowanPro. Thank you for sharing your expertise in the topic. And for those who are still with us, thank you for joining us today. If you want more tips and best practices from the experts, be sure to like and subscribe for more videos. Cheers.